Guys, we are on site today right here at 310th, a gorgeous 29-unit hotel right here in a phenomenal location in Myrtle Beach, South Carolina. Now, guys, look at that. That's the SkyWheel. Do you see that? That's a historic landmark. That's the backside of Ripley's right there. Obviously, there's a sign for the gay dolphin there. This is a parking lot just here. That's the back of the Ripley's building, and literally on the other side of this road, like if you come right there and make a right, that is Ocean Blvd, which I will walk to in just a minute. Now you'll see off in the distance there is the Aqua Beach Inn, and then that building right there, that is the Yachtsman. So you can see just how close to the coast we are. Now let's get a good look around 10th Avenue. It's a phenomenal location. It is not too far south to scare many investors. To be honest with you, the location is phenomenal. This property does great with short-term vacation rentals. As you can see, 29 units here. Someone bought it a few years ago, a previous investor, and redid it, fixed it up, remodeled it, added a lot of value to it. We're going to get inside and check out some units in just a minute. I just want you to see real quick. We've got a front office right up here, courtyard area here. And if we head this way, you can even see they have a pool set up. Absolutely stunning right here on site. I'm going to take you around just real quick and show you the other side of it. Now that is a parking deck. Again, this is a very busy area of Myrtle Beach, South Carolina. Busy enough to warrant a parking deck, which again just shows you why this site is an excellent location and has a ton of potential. Now, this is the front. As you can see here, they got some commercial space for lease down below, which is another income stream that we'll get into for the property once we go over the model for it. And then you have a neighboring little spot here with a fence. All American Ads is what the sign says, just right next door.
You'd like to invest in commercial real estate. I'd like to show you how these properties make profit and break down all their expenses so you understand how they operate, how they appreciate over time, and how this will impact your taxes. I'd also like to let you know the property's cap rate and how it compares with similar properties in the market, how the location best services its users, and the potential for future growth. I'd like to fill you in on the historical and future occupancy trends, as well as potential management structures affecting the investment. And we won't miss the investment's risk profile nor the best exit strategies. Yes, we'll cover the condition of the property, any value add potential, and repositioning, but we'll also dive into special topics like customer base, market positioning, and marketing and booking strategies when it applies. And if you stay tuned until the end, I'll show you my top picks for the best commercial real estate deals that have generated the most annual profits, have the highest appreciation, and the best tax implications. So no matter if you're a first-time investor or a seasoned professional transitioning into the real estate game, or perhaps simply a casual investor looking to relocate to the beach to live, play, and invest so that the passive income can support you in your retirement years. Whether you have 20% to pay down because you're financing or you're a cash buyer, if it's a commercial real estate investment that you're after, you'll be better because I'm aiming to give you a 10 times return on your time for watching my videos until the end.
All right, guys, so let's get in unit 108. As you can see, beautiful flooring. As soon as you come in, the inside of the unit's been totally redone. You got some nice recessed lighting here, accent wall, obviously 2 full-size beds, flat screen, closet. Now, we're going to get to the other side. That's a lockout there. However, I want you to see the ensuite shower, restroom. All right, so it shares a kitchenette. As you can see, you got a flat surface here. Oh, I didn't mean to turn that on. Let's get that off. All right. As you can see, absolutely modern, stunning. Behind me, microwave, coffee pots, another exit entrance here, and then the second lockout unit, second part of the unit here. Again, microwave, little fridge, flat screen, and its own restroom here. And that pretty much wraps it up.
I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the strong rental demand from a growing population. The city's population grew by over 20% just in the last decade, with a significant portion of new residents moving here due to the low cost of living, warm climate, and access to beach amenities. I believe you should invest in commercial or real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the tourism-driven economy. Tourism accounts for over 25% of the region's economy. The demand from tourism-related workers ensures a steady flow of renters in multifamily units year-round. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the affordable property prices and high cap rates. With an average cap rate for multifamily properties being typically around 7 to 8%, our market is higher than national averages for coastal areas, offering strong rental yield potential. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the potential for value-add investments. Many properties near the coast have strong locations but may be underperforming due to outdated facilities or lack of amenities. Renovating these properties can create significant upside for potential investors.
All right, guys, so we're on the second floor. As you can see here, there's the pool. Some stairs, got a stairwell here, as you can see. Got a little courtyard area here, as you can see. Peak of the peak is going to be June, July, and August for those peak season months for short-term vacation rentals in our property and our market. Now, as you come in here, you are going to see really quick this is electrical water heater. All right, guys, we're in the hall here just outside of unit 222. As you can see, you walk in, full-size beds. To the right, you do have kitchenette. Of course, there's a flat-top stove, nice undermount sink, cabinets. You do have a closet in the corner here. Recessed lighting again, accent walls, restroom here, tub shower combo. And of course, this unit does have its own balcony, as you can see. Some of these units do have balcony. Now, this is where, if you look down that road, you can't really see it from here. Parking deck's here because it is a very busy area. Country Music Festival is just down that road. Over 40,000 people come here for a few days, which again makes this property sing during that time of the year. I get calls and emails every day from investors just like you looking to make their move into the Myrtle Beach market. They want to invest in short-term vacation rental properties. They want to invest in oceanfront condos. They want to know where the best deals are in our market. Well, guys, you're talking to the right person. 843-360-1737. I'm going to help you put your hands on the best deals in our market. If you're a first-time investor or a seasoned investor, if you're 1 year, 6 months, 3 years out, I don't care where you are in the investing process, pick up the phone, give me a call, send me an email, shoot me a text message, and let one of the many stories on our channel be one of your stories. All right, guys, so you can see the courtyard here and the upstairs. We're going to get into unit 229. This unit here is, in my opinion, an owner-operator unit, honestly. I mean, it's absolutely stunning. You walk in, you have a nice living room. As you can see here, it has a balcony, which is pretty cool, of course. Overlooking the entire place. As the owner-operator, you're obviously going to want to be able to see everything and what's going on. These windows are shut, but obviously some nice open natural light. Plenty of kitchen space, refrigerator, stove, microwave. As you can see here, gorgeous quartz countertops, modern cabinetry, undermount sink. Again, plenty of natural light. You do have a restroom here with shower, as you can see. Again, tastefully done, very modern, very, very clean. Now, this was another sitting room area. They've converted it into a bedroom, again, in keeping with their current rental model. You have another bedroom here, as you can see. And then you got a final bedroom here. This is the master. And again, this would be a perfect little owner-operator on-site living quarters for the boutique hotel that this can be. That's your balcony. Again, recessed lighting, accent walls, king-size bed. Not bad. Not bad at all.
I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, because our market has been the fastest growing market out of the 150 most populated markets for the past 3 years. Over 90,600 people relocated to Myrtle Beach, South Carolina in 2023 alone. This means increased demand for commercial space like retail, multifamily, office, and industrial, and ultimately excellent annual profits and appreciation. Now, for retail, more residents equal more consumers equal higher rental sales potential. This drives up rents and occupancy in retail centers. For multifamily, higher population boosts demand for rental housing, pushing rents up and lowering vacancy. Now, for office, job growth typically follows population growth, increasing demand for office space. For industrial, more people means more consumption and e-commerce activity, increasing warehouse and last-mile logistics demand. Ultimately, the return on investment impact is higher rents, lower vacancy, and rising property values that drive higher net operating income and appreciation. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially oceanfront hotels in the hospitality industry, because of the 20 to 22 million tourists that visit our market each year, which is the #2 vacation destination on the East Coast. High tourism equals steady demand, making it one of the most visited beach destinations in the United States. Our oceanfront hotels benefit from consistent seasonal occupancy, premium nightly rates compared to inland properties, and repeat visitors including families, snowbirds, and golfers.
All right, so let's get into your 5-year pro forma. I want you to see just at this quick intersection that's just up from the hotel. SkyWheel is right there. We have the Holiday Inn right here, which is a beachfront resort. We've got Riptide's oceanfront rooftop bar and grill, just that green building there. And then next to it, we have the Yachtsman, which is a redone oceanfront condo or resort that's being sold by the unit. It just basically hit the market in the last 2 or 3 months. Pretty hot property. Further on down the way, I don't know if you can see it way down the way there, that big oceanfront or resort. That's Ocean's One, which is it's a great place to invest in our market. This area is the area that you want to be in for a boutique hotel. Now, year one, we've got gross rental income to the tune of $708,372. That does include that 5% escalation in growth. Other income, $61,500. I'm assuming that within the first year, you're going to rent out and finish the space, that 5,000 square feet, for commercial use. And we're going to escalate it by that 2.5% commercial rent growth rate. Now, if you have 708 in income, in rental income, you add in the other income from the commercial space, you are left with a potential gross rental income of $769,872. Now, you have to factor in vacancy, guys. Lenders like to see vacancy. They like to see that you're accounting for revenue loss or vacancy. It makes them feel like you have a conservative, realistic grasp on your numbers. Ultimately, you always want to include it. That's $15,397. It's 3%. If you take $15,000 from the $769, yes, you have an effective gross rental income of $754,474. Now, operating expenses. Your property taxes for year one, $40,517.94. That does assume the 4% escalation in property taxes. Your other operating expenses. Essentially, this is all of the operating expenses you saw on the profit and loss statement, not including property taxes and or management fees, which we'll get into in a minute. Now, the other operating expenses were $127,593.98. Your management fee was 3.5% of the effective gross rental income. That is a whopping $26,406.60. Real quick caveat here. If you do go with my plan and hire an owner-operator to run the boutique hotel, then you would be cutting out the property manager and reducing your operating expenses by $14,000. Now, yes, you would overall increase your operating expenses a little by having an on-site property manager, but there are certain efficiencies that you can create and performance that you can create by having an on-site person that I don't believe you can get with an off-site property manager. That's just my personal opinion. So your numbers can be adjusted a little bit to factor which scenario you'd rather go with. Now, your management fee, again, that was $26,406.60. That's the payroll for your on-site property manager. Your reserve was $34,369. Guys, that's going to give you a total operating expenses of $228,887. If you take those total operating expenses from the effective gross rental income of $754,474, you are left with a net operating income of $525,587. Now, annual debt service, I've got you at $254,478. That's going to stay the same every year. Your mortgage is not going to change over that 5-year loan term. It's the same. I'm going to cover that data with you in a minute. Let's finish this out. Your equity cash flow, if we have a net operating income of $525,587, we subtract out annual debt service, our mortgage, we're left with an equity cash flow of $271,109. Yes, that is a cash-on-cash return in year one of 18.3%. It's beautiful. It's absolutely stunning. This is a phenomenal deal. It's a stabilized hotel. It is phenomenal. You got 3 years of solid data in place, which we're going to go over. You're going to see those occupancy numbers. 3 years of solid data in place for a first-time investor, another investor has already bought this property, upgraded it some, taken a lot of that supposed risk out of it, of finding the demand for it. And yes, you're basically stepping into a property that you can make some minor improvement to. You got stabilized income on it. There's not much risk in the deal, ultimately. Anyways, cash on cash, you can see there 18.3%. You can see years 2, 3, 4, 5, and 6. I've escalated all those years out based on our growth assumptions, as you already know. And you can see that cash on cash return is steadily climbing from 18.3 to a whopping 29.4%.